What is going on, guys? Welcome back to the channel. Today we're very excited to bring you a new series on the channel, just like we promised a couple weeks ago when starting it. Today we are going to bring you our first episode of Bull and Bear. So what we're going to do here is we're going to take a single stock in this series, and we're going to go into a quick deep dive on the stock in a very fast format to give you the long-term outlook. So what does that mean? We're going to give you the bull case, we're going to give you the bear case, what we like and what we don't. So we're going to go really quick through the things on Netflix stock that we do and don't like. So starting off, we're going to start with the bull case. Netflix still has long-term runaway growth potential. What do I mean by that? Netflix has won over the hearts of Americans. I think we all know that. But when talking about Netflix, I don't think it's very popular in Europe, South, and Latin America yet. And these are huge untapped markets that they could grow into. So this is a positive moving forward, obviously, as they can keep growing their revenues. So with their proven business model, we can see that they have great customer retention. They have 193 million current subscribers month to month that love their service. Another plus to Netflix moving forward, they have great original content. Have you ever heard or seen of movies or series on Netflix that you can get nowhere else? I'm pretty sure you know what Netflix original content is already. I don't think I need to describe it to you. But in other words, these premium movies and series that are offered nowhere else but on Netflix add an added value to this stock because they are providing something that nobody else has, and people tend to love their original content.
With that, real quick, with the Netflix originals, say you're trying to get into that untapped market. If you are in Latin America and there's a famous up and coming actor or actress, and they go onto a Netflix original, it's going to be more popular in that country, in that area. So that's just another aspect that Netflix could take advantage of in the future.
Yep. That was a great segue into my next point because Netflix international shows and content also broadens the market. So if they keep making Spanish-speaking shows and, for example, Italian-speaking shows and German-speaking, whatever, regardless of what the language is, they have a huge market opportunity ahead of them. And if they can take advantage of that, like you said, I think it could be very successful in every region because, I mean, it's a crazy good business model. It's way cheaper than cable TV, and we're seeing that in their revenue growth. So let's see what else I got here for Netflix under their bull case under my notes. There's still potential for Netflix to grow 100%. So with that being said, how are they going to do that? I currently told you that they have 193 million monthly subscribers. They are looking to add another 200 million subscribers worldwide in the next decade. That could be huge. We're talking about doubling the business that they already have and then some. That is a big market opportunity if they can be successful doing that. So, again, cheaper than traditional TVs, TV cable. I don't think that needs an explanation. Like Dish Network, are you really going to compete with Dish Network? Like they're crushing Dish Network. No one's gonna buy DirecTV now. I can pay for Netflix and I don't even have commercials. Like it's a no-brainer, guys. It's a no-brainer. This company is set up to succeed long term. You're definitely going to pay a premium, but I think it's worth it. I think it's worth it in the long run because they still have half the business out there that they're saying, "Hey, we could double up. We could go into international markets. We could, you know what I mean?" So, I think the growth is there. I think they've proven themselves as the pioneers of the streaming entertainment network. I think they are the biggest player in this space, and I think they have the best brand recognition in this space to keep moving forward. That's our bull case for Netflix. Now that all the fun stuff's out of the way, let's start ripping it apart. What do we not like about Netflix? I'll let you get started.
So one thing that you said just a few seconds ago is talking about the premium. So Netflix is trading just under 90 times the prices to earning ratio.
That's high.
Which is a big number. I mean, you can make arguments both ways, but you're going to have to pay that high premium, and you might not get as much returns as you would like. as maybe someone who wants to invest in a smaller company that they feel has more room to grow.
Yeah.
You talked about their growth, but it's tough to justify whether they're going to be a hit in another country or a hit in a certain area.
Yeah.
That's one of those things that you have to invest and then almost hope for the best, watch the market, see what's happening, different things like that.
Yeah.
Another thing that I'm worried about is competition. So ever since Netflix hit the scene,
That's a good point.
there's been plenty of other streaming services, the biggest ones being Hulu and Disney Plus, who are both. Hulu's not necessarily new, but Disney Plus just came out,
and they're taking off, which is something to keep on the radar if you're a Netflix investor. Disney Plus is taking off. Give credit where it's due.
So, and Disney is the king of making their own movies. You know what I mean?
Yeah.
So they already know the business model. But not just to mention Hulu and Disney Plus, but station networks are doing the same thing. So NBC is coming out with their own streaming platform to watch all their shows and probably like the news or they can do whatever they want with it. It's their station, it's their network. But the problem is that Netflix has made a lot of money off of those network shows. So say like The Office, that's an NBC show. They might not have the rights to shows like that anymore. So that's going to be something tough that they're going to have to deal with over the next coming years. Of course, they have contracts, but when those contracts run out, NBC might not want to re-up because they can make money on their own streaming platform, streaming their own show, and not have to pay anybody for anything.
This could be a big concern, yeah.
So there's definitely a lot of competition talks. We'll have to see how they plan out, how they phase out, because not everyone's going to make it. Obviously, Hulu, Netflix, and Disney Plus are huge right now.
Yeah.
There's no one saying that there's not a market for all three of them, because if you own all three of them, you're paying like what, $35, $40 a month.
Yeah.
That's still a third of the price of DirecTV.
Exactly, and that's why all these platforms are stealing market share from cable TV. But with Netflix, this is definitely going to be a concern moving forward. With many more streaming services being introduced.
Yeah. Another thing I wanted to look at was their original content. So they have the Netflix originals, and while they're a big hit, we saw like different shows, especially once quarantine hit, blowing up on social media. It's just bringing them more business, but they burn a lot of revenue just producing those shows. So when they sign a licensing deal for, say, The Office, they pay either a certain amount up front or they pay them however they decide to do it. I don't know their terms and agreements, but when they have to spend money out of pocket to make their own shows, not all of them are going to be hits. They're gonna lose money on that. But aside from that, on the investor side, they don't have a dividend. So a lot of conservative investors are going to be more inclined to stay away because they want to buy, hold for 5 to 10 years, make their money off dividends, add a little bit of money in every now and then, just make money long term for when they want to retire or if they need something, things like that. So that's something you got to look at. They don't have a dividend. The last little point that I want to make about Netflix is the way they grew to what they are today. They started out as mailing DVDs to people at home. And it moved on to the streaming service, which was huge, and I wouldn't say no one necessarily saw it coming, but no one knew how to do it, and they created the business model. They were the ones to break the mold.
Yep. And
the problem is that they've had so much growth. I'm starting to feel like they've hit their ceiling. So in order to get massive growth out of this stock, they have to break that mold again. There has to be a new, innovative idea that is going to explode Netflix.
Yeah, because really, future growth is kind of dependent on whether they can win over these new regions.
Exactly. So I don't know if there's another idea out there. Like, what's next after streaming? We don't know. And who's to say that Disney or Hulu or some other company isn't the one that figures that out?
Yeah.
And then Netflix will be out. So, looking over the bear case, I don't hate Netflix as a buy, but there's things you have to look at moving forward. So if Netflix is going to be something you want to hold for 15 years, you have to think that there might be another company that overtakes it in 5 years.
You might be in for a bumpy ride, in other words, with this one.
Of course. You just have to know when to go in and when to get out. That's my only thing with it. Aside from that, I think it's a good buy, but
yeah,
that's the bear.
Yep. And at the end of every one of these episodes, guys, we're going to give you a transparency update, meaning that if we own or hold shares in the company, we'll let you know. And currently with Netflix, we do not. So the reason we do not is because we feel as if there's better uses for our capital right now. And when you're trying to scale a portfolio, this is more of a stock that we see for an established portfolio. For somebody with a lot of money that wants to build a position in a already solid company that wants to get a little bit of more growth out of their money. That's what we see. That's what we see this company as. These episodes are really just meant to give you guys an interior view of how we kind of assess stocks before we really dig into the financials to see if we want to put our money in them. So this is our first episode highlighting Netflix. We are not financial advisors. Obviously, do your own due diligence. These are just our opinions for entertainment purposes only. And I'll let you tell them to like and subscribe.
Yeah, as he had just spoken, like and subscribe. And if you comment, we'll comment back. Feel free to talk to us if you have any questions. Maybe not for the past videos or this video, but if there's anything that you have a question on, if you're a new investor, feel free to comment. We'll reply. We got nothing else going on. We're just in school, so
yeah.
We'll do anything to get out of doing some homework. So
if there's a stock that you guys want us to highlight next too, be sure to drop that in the comments. This is what this series is for, to go into a longer term outlook on these different positions. So with that being said, we'll see you guys for the next one.